It's countdown to the end of the year. Good morning and welcome to Business Morning on Channels Television. I'm Ini John Mekwa. Well, let's start the show today with global oil prices, which gained more ground today, with prices trading close to last session's one-month high on expectations that the Omicron coronavirus variant will have only a limited impact on global demand. Brent crude rose 7 cents to $78.67 a barrel, while U.S. West Texas Intermediate crude rose 18 cents to $75.75 a barrel, gaining for a fifth straight session. Investors are awaiting an OPEC Plus meeting on the 4th of January, at which the alliance will decide whether to go ahead with the planned 400,000 barrels per day production increase in February. At the last meeting, OPEC Plus stuck to its plans to boost output for January despite Omicron. And a new report by the International Energy Agency says it expects global demand for coal to hit an all-time high next year, driven by emerging economies. According to the IEA report, coal demand growth in China is expected to average less than 1% per year between 2022 and 2024, while in India, stronger economic growth and increasing electrification are forecast to drive coal demand growth of 4% per year. The report, which comes just 1 month after world pledged to abandon coal at 2021 United Nations Climate Change Conference in Glasgow, says that coal production is forecast to reach an all-time high next year and drop as demand flattens. And then back here in Nigeria, the year 2021, as the Nigerian economy recovered at a faster than expected pace since the pandemic-induced recession last year, 2020. The sustained positive growth is as a result of the statistical base effect after the economy contracted by 6.10% and 3.62% under the pandemic. Well, we're going to have this report put together by our business correspondent, Chimezie Obiwagu, looking at the performance, the economic performance of Nigeria in the year 2020 and the year 2021, obviously, and outlook for the coming year 2022.
By the fourth, or at worst, the first quarter of 2021, that the country will exit recession.
That was the optimism with which policymakers entered year 2021 after 2020 that was described as a year like no other owing to COVID-19 pandemic. True to the minister's words, Nigeria exited the recession in the fourth quarter of 2020 earlier than expected. The economy grew by 0.51% year-on-year in the first quarter of 2021, slightly faster than a 0.11% rise in the prior period. 5.01% year-on-year in the second quarter, owing to base year effect, and 4.03% in the third quarter.
I use the word the 3 T's. It was a tumultuous year, it was a turbulent year, it was a trying year. But in spite of these challenges, we were able to at least eke out a modest growth.
Aside from the fairly improved GDP, all other critical macroeconomic variables are not favorable. The PMI is still below the 50-point threshold. Unemployment rate is at a double digit. Inflation remains elevated at 15.4%, despite data showing it's trending lower.
The price of the market is too cost. All water, even the pepper, common pepper now, they are selling 1,000, 2,000. Even people that can buy small one, they can't be able to buy small one.
Everything there for government hand. Are you understand? Because I know that economic now they bring all this thing high. I will that economic is okay. Everything will come down.
And the big elephant in the room remains the foreign exchange.
We saw serious levels of depreciation in the exchange rate, which was very significant and had very serious impacts across all sectors of the economy. There were also concerns among investors in particular about the volatility of the exchange rate. Because in order to plan, particularly long term, you have to have a very stable, foreign exchange environment. We didn't quite have that.
The IMF is projecting a growth rate of 2.6% for Nigeria's economy in 2021. The central bank sees a 3% growth rate, while the fiscal authority remains more optimistic with a 3.5% projected growth by the end of the year. While these projections are positive, COVID-19 still poses a risk, coupled with a slow progress on revenue mobilization.
It's very important to grow at higher rates. In our view, that will require much deeper reforms, resolving the fiscal situation, bringing balance, making sure that fiscal deficits are lower.
2022 should be a year of specifics. Specifics, no mirage, no promises in the air.
The year 2022 no doubt offers some flicker of light at the end of a very long dark tunnel. But that light can only shine brighter if the policymakers take the bull by the horn by making some decisive basic structural changes in the way the economy is presently run. And with the 2022 budget now passed by the National Assembly, awaiting President's assent, Nigerians can only hope for the best. Chimeze Obiwago, Channels Television News.
Well, that's a review of the economy in 2021. Now let's look at the sectors. Let's start with agriculture. The sector recorded a 1.7 trillion naira trade deficit between January and September, as exports stood at 371.8 billion naira, while imports rose to 2.1 trillion naira. This implies that Nigeria is still highly import dependent when it comes to agricultural produce. Now, how does this impact our strategy on food security? We have Mr. Banjoko Omotunde, an agricultural specialist and the managing director of Banjoko Omotunde Farms Limited, joining us for this conversation. Good to speak for you, Mr. Banjoko. Thank you so much, and compliments of the season.
Same to you.
Happy holidays. So let's look at the year 2021 and see the agricultural sector. How did we do? How good? How bad? How?
It's really a challenging year, I must admit, and it's a mixed feeling for those of us in this sector, and we didn't do too well. I must admit that the starting point, we didn't do too well because we looking at all the numbers, none was kind of encouraging. And, you know, we look at a sector that contributes about 26% to GDP, employs 70%, and the contribution to that industry has been really, really low. You know, when you look at, from February this year, 2021, the price of virtually every product went up by 26%. And that's, you know, now not talking...
Are you talking of food crops?
Food crops, largely, because, you know, when we talk agriculture, is the food crops that really drives the food inflation rate, you know, food crops, livestock, fishery, forestry.
Exactly, because I mean, sometimes we forget that there's animal husbandry and all that as part of farming.
Those four buckets, but crop, livestock, fishery, and forestry, but the crop aspect drives the numbers very high. So when we are not doing well with those numbers, then other factors, other sectors, and these are not just numbers. These are things that people can feel in the market. Not just data, not statistics, not economic figures. We are talking about when you go to the market, because that's really the benchmark. It's not the data we pull out, is the benchmark, is what people feel when they go to the market. Not the inflation
figures that we see.
Yes, we say inflation figure is 17%, 16%. We can relate with it a little, but what an average Nigerian is more interested in, how much did I buy this thing last year? How much is it being sold for now? And when you look at it from January, especially February, things started going far high.
What are the drivers of this?
The drivers, to me, what happened in 2021 is summary of what has been happening over the years. But some other factors now triggered it though. But when we look at our investment into agriculture, you know, there was this Maputo Declaration in 2003 that every nation should do 10% of their budget into agriculture, which Nigeria also signed in 2004. But when we look at our budget, since that time till now, we've always been doing 1.3%, 1.4%. I think President Yar'Adua tried, he did 5%, 2008, 2009. 2021, we did 1.37%. And when you do that, 280 billion into a sector that we expect so much from, isn't going to do much. And when you now even look at the breakdown of the 280 billion, it's alarming how much is going into each of these sectors that directly affects the food security issue.
Or should we be waiting for the public sector on this? This is business. We have private sector. Apart from what we have a lot of interventions by the CBN, the Anchor Borrowers Program, and some other funds.
Yes, we do. We have a lot of those interventions, well mapped out on paper, but poorly executed. So that
would you say? I mean, the Anchor Borrowers Program, for instance, seems to be helping. I think the last count they say it's helped about over 4 million smallholder farms.
We are not talking about the figures being put out there. We are talking about what really is going on. I've been part of most of those projects, and I can tell you the implementation has not been. My advice in that regard is government can bring out this policy, but it should be driven by the private sector. If it is done, because government has the resources, largely, to do this, but the driving of it can only be achieved for us to have that direct impact by the private sector. The private sector are more in tuned. They know what to do, because that's what we do our benchmark with. As a private sector, for example, I'm in business to make profit while I'm also providing service. But for an average person in the public sector, they do the exams every 3 years. They are not moved by the overall implication of what some of these projects do at the end of the day.
But isn't the challenge why perhaps it seems the government is getting too involved in this, because the private sector is just there to make profits, and these programs are supposed to help those who are low there to come up. So if you leave it in the hands of the private sector, then it will just be profit driven.
It should be a private sector, public sector driven project, not 100% public, not 100% private. And when we look at some of these, they've done well in some states, fair enough, but in some of those states we were even applauding the government for some of these projects. We realized, seeing on paper again, that some of them are even unable to pay the loans they got to do the project. So eventually, can we say it's been successful? We've been in some of this meeting and we've told the government that the policies are good, but they can be reviewed for more impact. So 2021 really has been a challenging year. And like I said, it's summary of what has been happening in years. One is the finance aspect. The other one we should also talk about that I have been so much worried about, we look at even the flooding. In most, this year, for example, about 27, 28 states being affected by flood. And these are, the flood affected the food basket of the nation. We have flood happening in most of the northeast state, northwest state, and a part of the south state. So when you have this situation going on, it's just normal that we'll be where we are. But really, so many things have been going on that we now need to start paying attention to them if we want to reverse the trend of what we are currently experiencing as a nation.
Exactly, because we're going into a new year now. It's just a couple of days.
We are going into the new year.
So what steps, you talked about the issue of being real, the reality and not just the figures.
Not just the figures. So when we are talking about reversing the trend, you look at the 2022 budget, for example, you look at the breakdown. If some of the projects that have been highlighted in the budget will be implemented, as at when due, we'll start seeing a change. For example, NADA has been revived in 2021. It's an arm of the government under the presidency. And the 2021, they got 11 billion to start some new projects, revive some of our water harvesting structure, food reserve base, to work on stuff like that, to set up a scheme for the youth. If some of those projects are being implemented, then we'll start seeing a reverse in what we're currently experiencing. And of course, when we look at the number that has been displaced by insecurity also, it's a major concern. And when we also look at the impact of the finance structure we have for agriculture, we go to seminars, we do webinars, we do all that. And when we look at the number of people who shut down their farms in 2021, some of us are very worried.
What made them shut down the farms?
Some of those reasons, one, flood, some, the funding structures we have.
What's wrong with this funding structure and how can we put it right?
The funding structure we currently run, it will be difficult for you to survive on a loan of 29–30%. You need, and BOI, that's why I said if they go by the budget for 2022, The government plans to recapitalize BOI, Bank of Agriculture, in 2022, recapitalize Nike in 2022, support some other government agency. If they're able to recapitalize these banks, then we'll have a reversing trend. Why did I say that? Because, for example, you need a single-digit loan to be able to fund agriculture. You need a long tenor loan, not a loan of 30% in 12 months, when my goods are even still on the field. And even...
But the Bank of Agriculture should be structured.
It's not functioning at the moment.
Yes, I know that. But it should be structured. I mean, we hear a lot about the Bank of Industry, you know, how they're being impactful in the industry and all that. But for the Bank of Agriculture...
They've been dormant for years.
Yeah, because people are not paying back loans or...
I'm not sure. Like you rightly mentioned, how is Bank of Industry doing it? So then, Bank of Agriculture should follow the same route.
Or is it that they didn't get the specialists? You know, people who understand, because I know when you talk about funding in agriculture, it's something that you need to have knowledge in. You need to be knowledgeable
about it.
Yes.
I think you only need to work closely with, I know how BOI runs their stuffs. BOI is run, even though it's a government agency, they give the loan at single digits. They work with you as a manufacturer, as a processor. They work with you. They don't just disburse loans.
They help you do your papers.
So they help with your papers.
The loan, ensure that
you get the loan. They still keep working with you.
Sure.
So they are actually after you doing the work. So not just, funding. If you are providing the fund, one, it has to be a single digit. Then you have to work with the farmers on realistic projects. And then you are working with them to see the end product, and they are willing to also scale at the pace you are willing to fund them. So if we are willing to fund these farmers, you did 5 hectares this year, you've been able to, okay, we can see the trend, you've supplied, then we'll give you more funds. We'll look at where are you supplying this product. So those are some of the things Bank of Industry does.
So let's, because we're almost out of time now, let's also look at it from the private sector.
Yeah.
Agriculture is a business.
It's a business.
So people ought to be interested in going into it, and they can make money. For instance, I've been to like a southern part of Kaduna, and I know a crop like ginger.
Yeah.
It's just there. You know,
wasting away.
Yes, it is waste. And I'm thinking, isn't it possible for one rich individual to go to that area, set up a factory, get close to the raw material, get the raw material, and you have a lot of young people who go there.
Willing to work.
Yes, and they get it little by little and just sell it in bits.
You create employment.
Exactly. Is it not possible? Is there something stopping us from doing that?
It's possible. If you look at maybe the funds that came into agriculture in 2018, for example, I think about $290 million. In 2019, about $490 million. And in 2020, I think about $400 million came into agriculture. 2021, maybe roughly for now, maybe a bit above $200 million. We'll know the final figure at the end of the year. But the funds that came into agriculture this year have been greatly reduced. When we look at some of the platforms through which we get money into the industry, most of them had issues. We are not well prepared. Some of them, were not well structured. And the funds that came in this year were not well managed, and there was reduction. So then secondly is the fact that most of the people that have the funds, agriculture is a long-term thing.
Yeah.
So most people that have the funds, like you rightly mentioned, they are looking at return in maybe a year or two. But if you are really coming into agriculture, you must not just for the money. Even though I said it's a business, but it's not just for the money that you want 60%, because we talked to some investors, they want 60% in a year. So when you have such investors coming into agriculture, it's going to be a lot of issues. So we should be talking about investors who are willing to wait for some time.
Mr. Banjuka, I think you have a lot of work to do. You are in this agricultural sector. Please convince people that it's a long-term business that is sure to bring profit. It's a win-win for everyone at the end. It might take time, but it's a win-win for everyone.
Yes, it is.
Create employment. We maximize our potentials as Nigeria. Every state in Nigeria
has... Even the insecurity we are having, it's part of it.
It's part of,
because unemployment everywhere.
So it's a win-win at the end of the day.
The brain drain we are having is part of it.
So, and then you make your money.
No, really, it's an interesting field. Some of us have been encouraging a lot of people to come into the industry.
All right, we're sorry, we really need to go now.
Thank you very much,
Director. Thank you so much, Mr. Banjoko, for joining us on this conversation.
So
but we'll be watching you to ensure that you practice this. So we'll just take a break now. And after the break, we'll delve into another sector. And this sector affects even you, affects every other sector. Find out what it is and what we will talk about it in a short while. This is Business Morning on Channels Television. You're welcome back. Well, the National Union of Electricity Employees believes that the electricity supply across the country is worse than it was some years ago before the privatization of assets of the defunct Power Holding Company of Nigeria. Is this a fact or not? We have Engineer Moses Jebutu, the Managing Director of Milan Continental Limited Engineers and former head of Technical Services at Ikeja Electricity Distribution Company, joining us this morning to have a look at the power sector. Good morning, Engineer. Thank you so much for joining us. So has power supply been better this year compared to last year?
In actual fact, is yes and no. A lot of investment has gone into the power sector for the past 8 years, both on the part of the players in NESI. The players mean the private sector running the defunct assets, and then the government in itself. A lot of assets have gone into it. So in that way, it would be wrong for me to say that there have not been a lot of improvement in the power sector, because power sector is capital intensive, and you don't give impression that government and the players have folded their hands for the past 8 years and they do nothing. But the challenge we have is that results have been a bit marginal, not as expected, and the reason is not far-fetched. The reason being that it is possible that these challenges have not been well identified, well defined, and then made to pass through the smart test to be able to know which quick wins to pick to close gaps. By now, we expected the gaps that the private sector took over from the power sector should have been closed.
Exactly.
By now, but those gaps are still very much in there. Look at the power value chain. You talk of the generation.
Talk about metering. We're still discussing
the generation,
metering.
The transmission, the distribution, metering.
Even after MAPS was created, the meter asset provider, I mean, we still don't have
a lot of gaps. A lot of gaps are inherent. And what should have been done is that the quick wins should have been defined.
The low-hanging fruits.
When quick wins are defined, and you made them to pass through the smart goals test, there's no way. The goals must be specific, they must be measurable, they must be achievable, they must be reliable, and they must be timely, so that you can measure what is being done from time to time. Even if you are achieving them at 10% rate for the past 8 years, we can say by now we have achieved close to 80% in closing these gaps. And that has not been the case. Well, if you look at the statistics now, look at generation, our capacity is still 12,000, about 12,000 plus megawatts. Install capacity, available power, available capacity still remains about 8,000 megawatts. The actual generation is still between 3,200 and 3,800 megawatts, which is not very palatable. And when you look at transmission, even though a lot of investment are going into improvement of transmission to close the gaps, in theory, we say we can win 7,000 plus megawatts. But in actual fact, we cannot win more than 5,200 megawatts. You can still say the figures are still not that good. The same thing with distribution assets. They have been improved quite all right, but they are still very marginal. And to now say yes, that improvement 8 years ago is better, is in terms of customer service from the discos. You can see now that most of their staff in the field, you can, when there is a fault, you don't know who to approach. They don't reach out to their customers to let them know there's a problem, and this is what we are doing on it. And don't even to report to, and it's as if they have been slack in supervision of those in the field, because the bosses lock themselves up in the field thinking that everybody should be a standalone, which was not so 8 years ago when they were under government. You dare not keep yourself away from customers, because if you refuse to do what is right, reach out to them and let them know the problem. Tell them what you are doing. If you don't do that, they reach out to your boss. You will be reprimanded.
But now we hear the NERC telling people, oh, you can reach out to us, you can make complaints, you know, you can do this. Are those platforms not working?
You mean NERC?
Yeah.
No, it's not NERC that is running the system. NERC is a regulatory organization.
Exactly, that's what I mean. They do say, for instance, as a customer, if you're not satisfied, you have issues with your meter, with your transformer, and you're not getting attention, you can actually report to them.
No, they themselves will be overwhelmed. Primarily, those who are supposed to do the job are not doing what they should do. I think it should be as a last resort that NERC is being informed. Not that if everybody start writing to NERC, you have millions of complaints. If somebody is
maybe that's what's going on now.
Oh, so the disco operators the management need to be told that this is not just any other business. This is a business where customer is the principal thing, and the customer is the ordinary Nigerian.
Okay, so when you talk to discos, I've had conversations with them, and mostly what they say is the tariff is not cost effective. You know, meanwhile, the people are asking for service effective tariff. So they say, like you've noted, there has been changes, there have been investment, there have been improvements in equipment, but they cannot do it as much as they should because the tariff is not cost reflective.
That used to be the song. But I can tell you, as last year, NERC decided to approach this issue headlong.
Yeah, even this year, there's been...
They gave another 198 of 2020 to address this issue, but with condition. You know, that discourse, what they did was that they want discourse to make sure that quality power is given to the customer, that the customer should be able to enjoy at least considerable time of service, and then metering must be adequate. Those are the three conditions that they have to meet for them to get cost-reflective tariff. And in order to achieve this, they now amended the MITO. The MITO tariff, that's multi-year tariff order, was re-amended. And what they did now was that they now classified the tariff into about 5. A to E. That is A for people who enjoy power service for 20 hours and above per day. B for those who enjoy 16 hours per day. C for those who enjoy 12 hours per day. D for those who enjoy 8 hours per day. And E for those who enjoy 4 hours of service per day. And revenue the tariff has now been graduated along with that. So A can be you pay for A will pay what do you call it, cost reflective tariff. You don't expect a man who doesn't enjoy power for more than 4 hours in a day to pay cost reflective tariff. So it is now on the part of the disco to now do the right thing.
So where do we go from here? Where do we go from here? Is there something we can do to at least let's see a change? We have MAPS, the Meter Asset Providers Policy. You know, we still have that ongoing. What can we do?
There has been a lot of confusion in metering. I don't know. As of last year, I think now from NAC report, we still have 60% gap. But my concern here is not really the gap, but how can you have an open-ended gap? Gap has to be capped. Because what is meant by a gap is that things that have been left undone that you now want to remedy, not things that are being currently done. I expected the gap to have been capped so that we are addressing that. And a lot of CBN intervention has come into that.
Exactly.
But when new customers apply, you treat them and make sure they are adequately metered immediately while you are addressing the gaps. But now gaps are not the gaps are not capped, and therefore it becomes open-ended. Even new customer become part of the gap, so the gap cannot be closed. These are issues I see. Something else.
So how do we solve this? I mean, what are some of immediate steps we can take to solve it?
Immediate step is that we have to do mass meeting for gaps, and the discourse must have meters for the people who are applying. Immediately you apply, you meter them. That's the only way they can enjoy cost-reflective tariff, as NEC has put it in the vital tariff.
Well, it's a lot, because when we start talking about metering now, we talk about the local manufacturers, the importation of it. Then we talk about vandalism and thefts in the industry. So many issues just going on there. And I mean, this power. And then, of course, we also have the alternative power. Are we embracing that? We have the wind, we have the solar.
In terms of renewable energy, incidentally, the government has a policy. There's renewable energy master plan. But the challenge we have in this country is that I think there used to be an agency set up by President IBB that time under Professor Jerry Ghana. Is it MAMSA they call it, or I can't remember what they call it there? MAMSA?
Yes.
A lot of education needs to be given to Nigerians to understand what government is doing.
There's a rural electrification also.
Apart from rural electrification is doing renewable energy in some universities. They started from under Engineer Ogumbi. I think they started that program. But the mass one, the programs can only be made to be entrenched through private sector investors. But they are not aware of some of these policies, and they need to be made aware. Even between 2015 and 25, it was the 25 from that policy master plan, the new energy master plan, through small hydro, achievement through small hydro, solar.
So we have these policies, but it seems like a lot of people do not know.
There are even incentives attached to it.
Enough people do not know about it to take advantage about.
There are incentives attached to this master plan. If you want to go into establishment of a renewable energy plant, there are incentives, loan facility for you, even custom duties are waived, and some other things.
Engineer, have you gotten engaged in any of them? You should get engaged in one of them anyway.
We are into energy practitioners, so we are practicing.
All right, thank you so much, Engineer Moses Jebutu, for being a part of the show this morning, and enjoy the rest of the holiday.
Thank you so much. God bless you.
Amen. You too. So we'll do an opening call to the market now. Willie Borg is standing by, maybe to give us a taste of what to expect when the market opens tomorrow. Okay, I silence. We need to take a short break, and then we'll be back to Will.
What?
You're welcome back. Now let's do that call to the market. Will.
Hello, E. Good morning. Good morning. We're still in the holiday spirit, holiday mood, and last week we are going to be looking at what happened in the market last week, especially the equities market, where we haven't delved into. We would see that the bears actually dictated the proceedings in the equities market. Profit taking still persisted, as you know, and dominating the performance. Actually dominated the performance last week, with the benchmark index down 0.21% to close the week at 42,262.85 points. And we say the market cap is still at 22. It's still hanging at the 22 trillion naira level there. And what drove the sell-offs? We saw FBN Holdings, MTN Nigeria, also Access Bank and Zenith Bank driving the losses for last week. We've seen that the month-to-date return is now lower, it's negative at 2.3%, and the year-to-date gain has moderated to 4.9%. Is actually slowing down now, and we're hoping that that doesn't, get lower than what we've seen. The activity levels were really, really low. It was really big. Trading volumes and value declined by 26.7% week on week and 18.8% in terms of value. And so we saw sectoral performance was also relatively good. Banking, consumer, industrial, insurance sectors were up. Oil and gas was down 0.52%. But we have Phil Anegbe. Let's bring him in to give us more insights as to what happened last week. Good morning, Phil.
Yeah, good morning.
How are you today?
Yeah, I'm great. How are you doing?
Happy holidays.
Yeah, thank you.
Okay, so we saw the market performance last week. It was quite bearish, not much to be desired. But what's your assessment of it?
Well, the expectations are well aligned with what we saw last week. Activity levels were very weak as expected. People wind down for the festive celebration. So volumes were down. We expected that people will take some profits and wind some positions as they prepare for the festivities, and that was exactly what we saw. So going into the end of the year, in the last few trading sessions at the end of the year, you expect the status quo to continue. I think a major highlight last week was the Union Bank, the deal that was talked about on the Union Bank. And that may have something to do with performance and speculators positions. But essentially, you expect largely the same in the remaining session of this year. People unwind positions and relax for the festivities.
Okay, so we're talking of the acquisition by Titan Trust to acquire 89.39% majority stake in Union Bank. The stocks rallied last Thursday by 9.78%. Can this rally be sustained? What else should investors expect?
Well, it's difficult to call at this time because essentially it's mainly speculators, right, taking positions ahead of maybe more information on the deal. So a lot will depend on the provisions or the terms of the deal when those information become available. But as it goes, speculators don't wait until documents are released. People speculate ahead of the release of those documents, and that was exactly what we saw. So you expect that people may still be rolling around the stock, and a few other ones that have some sort of corporate actions backing them with the hope of trying to more or less take advantage of those kind of information as they come. So it is typical market activity and typical investor reaction. So it's essentially what was expected around those kind of corporate actions announcements.
So the year is drawing to an end, and investors probably are disappointed because they didn't get the Santa rally that we expected. But we are seeing that investors are going to be taking position for the first year declaration of dividend that's going to take place. Do you see investors having interest in that since they didn't get the rally that they expected in the equities market this year?
Yeah, I think this year is unique relative to last year and maybe the one before, because we are going into a pre-election year and the level of cautiousness is far higher, right? You have the risk appetite for a lot of investors a bit more contained because next year is pre-election year. There were a lot of election activity, and there's also expectation that yields will trend higher. So all of those kind of expectations don't necessarily bode well for equities market. So that may have informed the cautiousness we are seeing. But we expect that as January starts and maybe going into February, you begin to see some more tactical plays ahead of dividend announcements. We expect that full year results will begin to trickle in from April, right? And ahead of the release of those full year numbers, investors will come back to the market to just take tactical positions in dividend paying names. So that is still likely to materialize next year. How these going to be likely bothered or funded by some sort of cautiousness because of the election year and because of expectations for news in the next year as well.
Thank you so much, Phil Anegbe. Phil Anegbe is a research analyst at Cardinal Stone Securities. So Ini is more of investors being risk off and not risk on in these coming years because of, well, ahead of the elections. So we're going to watch and see how the market will play out.
Yeah, I'm really curious to see how the year will end in the market. I'm serious. I wonder what investors will be doing. Will they say, oh, okay, let me just keep a little bit of this and wait for it to grow next year? Or no, let me just get this. I need to take care of myself and enjoy myself at this end of the year. Well, it's just a couple of days, so we'll see.
We'll watch and see. You'll definitely see how the
We'll keep our fingers crossed as usual.
Of course.
Thank you so much, Will. So I will take a break now. When we come back this time around, we'll head to the UK. Do stay with us. It's Business Morning on Channels Television. You're welcome. welcome back. We've been getting some background information on probable ways the UK may adopt to deal with the spread of COVID. But one thing that seems constant is we should not expect restrictions. Well, let's not do the probability. We have Juliana joining us now to give us updates from London. Hello, Juliana. Good morning.
Annie, good morning.
So what's the latest on the plans to curb the spread of COVID-19?
Well, the latest is there are no new restrictions for England this time of the new year. I think a lot of people are expecting it. We know that the devolved nations all have restrictions in place. So this is Northern Ireland, Scotland, Wales. They've all curbed the way people can socially interact. But that is not happening for England. Yesterday, Prime Minister Boris Johnson met with his chief scientific advisor and the chief medical officer for England, and having a look at the data, they decided that the way things are at the moment, which includes the Plan B measures of working at home, are enough to curb COVID-19, even though the Omicron variant makes up about 93% of infections here in the UK. There was blackout, of course, over the Christmas period, but I believe about 113,000 people tested positive on Christmas Day, over 100,000 on Boxing Day. So it's still very rapid here in the UK, but no new restrictions. So people in England can feel free to celebrate the way they like. I've got to say, Innie, I am hearing myself back. So if we can sort out the audio for the next question, that'd be wonderful.
All right. I hope the back end could help us deal with that. Juliana is hearing herself. There's a hollow back there. And then, Juliana, by this time, we would expect post-Christmas shopping to pick up. Has COVID done any damage to this?
Well, yes and no, Innie. We've discussed, haven't we, for so many months about the British High Street, and not just really in Britain, across the world, because of the pandemic and because of online shopping. It has been difficult for retailers to reap the benefits, and I think that's been the case. There's been some data conducted by Springboard, which is a retail analytic site that are able to look at footfall, and they have realised that on Boxing Day, which is traditionally the busiest shopping day in the year, footfall was down by about 46%. But that doesn't mean people are not spending. Barclaycard were looking at forensic data on that day, and they see that the average person in the UK was spending about £247. This is up from about £164 last year. So even though people are still worried about going out and scrambling for clothes, people are spending online.
Yeah, well, we'll always find a way to survive, I guess, as human beings. Thank you so much, Juliana. We'll talk to you later at 1:30.
Thanks, Innie.
We'll take another quick break now. This time we're going to the cryptocurrency market, and Laddie Williams is standing by. Hello, Laddie.
Hey, Innie. Well, the market is looking quite red today. It was, good from Christmas. But now we're having a pullback. Some people taking profit there. Market cap, $2.32 trillion is down 3.18%. We see volume this morning, $98.52 billion is up 36%. Bitcoin dominance, 40.15%. We see Bitcoin there losing that $50,000 support. It's now at $49,316. It's down 3%. And obviously, when Bitcoin has a pullback, you see all coins also having a double digits pullback. Anyway, let's bring in Rume Ofin, our digital market analyst. Hello, Rume. Good morning.
Good morning, Laddie.
Yeah, so Rume, different people have different, perspective when it comes to this market this year. Some say it was quite profitable. Some say it was quite a dump, for them. How is it from your end?
Yeah, so thank you very much, Laddie. This year, cryptocurrency has been really reckoning. If you ask me, it should go down in history that something actually happened in 2021. For the first time, we saw that, I think in September 7, 2021, El Salvador actually legalized cryptocurrency, Bitcoin, as money. Then we saw also at some point cryptocurrency regulation issues was top in the U.S. Senate. We saw pro-Bitcoin senators and congresspersons, right? So in the Senate we had, in the U.S. we have Cynthia Lummis, very popular name, and Congressman Mark Henry, and a few others. We also heard stories about Miami mayor, which Francis Suarez, which said is going to receive his paycheck annually in Bitcoin, and actually gave a speech at a Bitcoin conference that happened earlier this 2021 in Miami as well. The story of Michael Saylor is something that has been everywhere. The CEO of MicroStrategy, buying Bitcoin, always buying deep, almost having about 120-something thousand Bitcoin. Then Elon Musk also came earlier. Let's not forget in a hurry at some point the impact of Elon Musk in February, yes, where Tesla bought about $1.5 billion worth of Bitcoin and said they're going to be accepting Bitcoin for purchase of Tesla. You saw the market went up. But he also raised concern about how Bitcoin is being mined and all of those things. We saw the market to go down. Then issues of the US dollar inflation, from printing of dollar here and there for COVID. Patients that people that actually couldn't go anywhere, so they needed to be given stimulus package, and they actually affected the dollar. And we saw in news around it, people hedging their funds with Bitcoin and another cryptocurrency. Then there's this big one that actually happened again by Crypto.com, where they named a very popular stadium for in Los Angeles, Staples Stadium, where a lot of persons usually go for basketball playing. So it's been named. The arena was named to Crypto.com. So that was a very big exposure for crypto in this year. Then let's come to our clients, where the CBN banned crypto. Let's not forget earlier this year there was a total ban on crypto transactions from the bank, and the more recent one, a total closure of accounts of individuals that have something to do with cryptocurrency. So 2021 will go down in history as a very significant year for cryptocurrency, both in Nigeria and the world in global. And I'm very, very delighted, to be part of all of this that is going on in this time. Thank you, Ladi.
And let's not forget the most bullish president of El Salvador, Bukele there. He was always buying those dips.
Exactly.
All right.
Exactly.
So Bitcoin, has been doing well for a while now, but this morning we're having, quite a pullback, with altcoins also pulling back. What's happening?
So there's something I usually tell people about, although I was looking at the Bitcoin white paper, which should be a document for everyone to go look at. Satoshi Nakamoto proposed that this is a peer-to-peer electronic cash that is away from the traditional banking sector. So why we've always, because it's quite new, and a few of us are getting cryptocurrency, changing it for our local currency because of inflation here and there, it has a way to a lot of people like to look at it from the dump, a short-time dump, a long-time, but the idea is to transact with it. So all of this short-term dump you are seeing is as a result of the fact that people are actually either scared of what is going to happen next, or maybe the Omicron thing that happened is scared. A lot of people actually didn't understand the underlying technology. If you have the right education, the idea is just buying at every dip. So when things like this happen, it's a very good indication that people are being scared because they don't understand. It is not your regular financial system where you do the normal processes. This one is quite different. So the more they understand, the more they become diamond hands in the process. So I urge everybody to get Yeah,
but Ruma, it's quite scary. You buy Bitcoin or an altcoin when Bitcoin was around maybe $68,000. It hasn't hit that amount in a while. It's still around this 50K region. So obviously, some traders would be afraid. What would you say to a trader like that?
Okay, so look long term, right? A time when people bought Bitcoin at 17,000, it went to 3,000, got to 20,000, went to 34, now it's 49. It went to 6. So if someone actually bought at 68, the person bought the tops, and it's not good. So most times seek education, so it gives you this confidence. You have to wait, I believe, in the shortest period of time, because a lot of adoption is going to happen next year. It's going to surpass that, obviously. So this is just a rejig and more like a short-term shake of the market. So stop thinking short-term if you want to excel in this industry.
Right. I guess every trader's, the nightmare of every trader is actually buying the top of any market. Anyway, what altcoins stood out for you in the year?
Okay, so the truth is that the Bitcoin dominance is dropping really down. You can see that a whole lot of altcoins, they actually went down, but not like the way you will usually see them when Bitcoin is down, then they all rush down. So it only shows one thing, that all of these projects that are really outstanding, they're having money flow into them. So you will begin to see them in the first quarter next year, see a lot of green diddles going up here and there, and see people going for real life case scenario, real value, not some pump and dump that is going on. But again, some of these things can be dicey. Somebody that goes for pump and dump can be a bit lucky and get some fund and invest it on some good projects and actually scale. So it's a bit very tricky though. Sometimes you can get your hands really bored. But if you advise me, if I want to advise any young person that wants to come in or anybody that wants to come in, you look for projects that are actually solving real life situations.
Right. And I guess the trend is also your friend. All right, Rumi, thank you so much.
Exactly. Thank you very much, Labi. Always a pleasure.
All right. So price of Ethereum there lost the 4,000 range down to $3,922, down 3%. 24-hour volume trading Ethereum, 13.72. Top water market cap, it's mostly red, just BNB holding up there at 0.53%. Cardano is down 1%, and we see Solana, the biggest like there, 4.20% down. So it's still fair in the market.
It's still fair, but I kind of like the summary that Rume gave of the
right.
year.
It's quite an interesting
summary. Very, very interesting, Rume. I think you did well. Thank you. Well, that's it on the program. Thank you so much for being a part of it. It's not over yet. We're still in 2021. 3 more days to go. But that's a wrap for today. Remember to join us at 1:30 for Business Incorporated, where we'll have updates for you from the world of business. I'm Ini John Mekwa.